Hello, and welcome to today's episode of Derek Invests. I'm your host, Derek Miller. What are we going to talk about? Well, there's been something interesting playing out in the stock market recently. So, we all know that tech was driving the stock market higher, and it has been for years. All of a sudden, right now, people are starting to talk about, oh, it feels toppy, it feels heavy, there's light volume, and we're at a high. These aren't necessarily good things. However, the Dow Jones, the top 30 industrial companies in the U.S. and basically world at this point, are making new highs and daily, and so is the S&P 500. So has the Nasdaq simply gotten away from itself to a point where these other companies are now going to become our leaders? Is this going to become the driver of this bull market? Is going to be industrials or some of the companies in the S&P 500? Is that where we're headed? Or, and this is a big or, if there's only 30 companies in the Dow Jones Industrial Average, that might be easier to manipulate. If you wanted to hold a stock market up higher, tell everybody, hey, the stock market's A-OK, we're good to go, pile on. 30 companies is a heck of a lot easier to manipulate than, say, the S&P 500 or the NASDAQ, right? So is that maybe what's going on? And the reason we want to look at this is because there's a lot of historical things going on right now. And you're probably, if you keep up on finance, you're noticing some of these things, right? So, for example, we had, for the first time, we had a 50 bip rate cut since 2007. Everyone knows what followed that 50 bip rate cut. There are a couple of more. I think it's 2001. There's a 50 bip rate cut. We know what followed that rate cut. Okay. We have housing, new mortgage applications at an all time low. And I think we've only been here twice in history, both of which were followed by a real estate dump and a recession. So we have all these factors saying how bad everything is. But there's one thing that people are not talking about that may change this circumstance, and that is that in 2021, the U.S. increased the amount of currency in circulation by 50%. This is beyond historical. We've never even come close to doing that before. So a lot of the stuff you're seeing now can simply be a reaction to that circumstance that was intentionally created, that created the inflationary environment that we're in now. Okay. It created all this inflation, which extended housing prices well beyond what they're worth, well beyond what they're worth. And forget what they're worth. Let's talk about what people can afford. All right. They've just gotten out of hand with affordability. You can decrease rates all you want. You can bring mortgage rates back down. But when houses go up 40% in like 3 years because of a false inflationary environment, all that money was put into circulation. Well, guess what? All that money has to be pulled back out. That's what inflation does. It pulls the money back out of the system. Now we're going to yank rates down. I think we're going to see a choppy up and down with rates for a decade, would be my guess. That's probably the best way to get a soft landing. But instead of guessing and pre-assuming all of these things, let's go look at some industrials. Maybe, what's going on right now, maybe the response really is that there's going to be an industrial revolution in America again. Hey, we have a lot of cities that are ripe for it. I've seen a lot of guys talking about it, talking about places like Detroit and industry coming back. So why don't we go take a look? So, it's all the typical characters that Honeywell, Boeing, Caterpillar, GE, Triple M, you name it. You know what they are. So let's go take a look at some of these companies. All right. And what we really want to look for here, what we're really interested in is institutional participation in these stocks. Are these stocks truly being piled into by institutional money? All right, by the more knowledgeable hands of the market. Let's take a look. Honeywell. Well, in the outset, when we look at this, it looks like volume down here is pretty par for course. Par for course for any of you that don't golf, and I'm not a huge golfer either. All that means is business as usual. That's all it means. Just means business as usual. If you look, that's your average. I would say that's your average volume over the last, 20 years. And that's pretty much where we sit with Honeywell. So let's go ahead and zoom in on that. Let's zoom in down to a weekly chart. Let's see if we see anything. The highs of 2021 were nowhere near them with Honeywell. So that would definitely not be screaming strength. And this basing pattern here is not screaming strength either. Okay. Let's go into a daily. Now, we would expect that what we're going to find, here's going to be some short-term strength. This is a gap down, most likely an effort to pick up more of Honeywell. This is our first positive indication right here. So anytime, for those of you that are new to watching my program, anytime you see a gap down like that, and then you see it's followed by a massive piece of volume, which is just trading activity. When you talk about volume, just think about trading activity. So when you have a ton of trading activity followed by a gap down, and then it's basically a price reversal, price is going higher. This is a search for supply by institutional money, which means you should exceed this price, or that's the price being aimed for. Your first stop in this case is probably right around there. Okay. That'll be your first stop, but ultimately you're headed to 220, and we sit at 207 today. So this is your first indication of some real strength, some legitimate buying. So let's go ahead and zoom in a bit more down to 4 hours. And for those of you, and this is that same gap, there's that same volume, that same trading activity. You're going to come up against a little wall here, but it looks like it should punch right through that. For those of you that are new to watching me, the reason we're so concerned with trading activity and trading volume is because there's only one group of people, and it doesn't mean they're all on the phone talking to each other, but there's only one group of people that has the ability to create volume that really stands out on a chart. And that's institutional money. That's the more knowledgeable hands. That's the people that have computer trading, that have algorithmic trading, that have AI trading, because they're setting at the same levels. And so they're pretty easy to identify. And if you stick with that crowd, you have the opportunity to make good money because you can see where they're headed. So Honeywell, really, we don't have to even get too deep into it. We definitely see some strength. We now do have a gap down here at 205.50. So perhaps when we hit that, I think it was 208.50 or so, revert back here to say 205 before you take off. Ultimately to whatever that was, 213, and then most likely your next stop is up there at 220. But there is definitely strength in Honeywell. There definitely is institutional buying taking place, and it started taking place very close to where we sit now. 204, 203, came down as low as what, 196, 195.61, so no, 196. So yeah, we see some strength here. So let me go ahead and reiterate that one more time. So there's the trading activity, okay? Here's your gap down. They used earnings to accomplish that, by the way. Earnings were used to accomplish that gap down. You see that earnings right there? That button. Boop, that means earnings, that E. And so what we're most likely looking at is back to 220. So Honeywell 220. I mean, it's a daily chart, so next 6 months. Oh, let's see. We're at the 25th. My goodness, this year is flying by. So it's the 25th, so target. You don't even need a target date. That's the truth. You really don't. Let's put showing strength, though. I'm always trying to use this. I don't mind putting target dates and target prices. I don't mind doing that at all. The one thing I don't want to happen, the one thing that I've seen happen before, is people start to get caught up in the target prices and how do I copy this person and so on and so forth, instead of learning and just trying to learn this for yourself, learning how to identify these areas for yourself, and that really is the point of what I'm doing here. Target prices and target dates are easy for me to put up. I have no problem doing it. You can go back and check on my accuracy anytime you feel like it. But the real point here is for you to start seeing some of this stuff for yourself and seeing why it's occurring. So I love this particular chart as a learning mechanism because it lays out one of the more perfect scenarios when it comes to identifying institutional buying, using gap theory to explain how it got there, and also it goes right along with what is happening economically. So it explains some economics too. I like that a lot. I look for those examples all of the time. Let's look at UNP. Let's go back to a monthly. I would expect some of these to be already at new highs. I'm not seeing that. So what this could be telling us, we don't see any volume to speak of down here. You see, it's just average, maybe even below average, because I would probably say that's your average right there. So I would even say we might be below average. I might have my line a little high, but I would say we're below average in volume. So that does not exactly speak strength. Just so we're clear. Okay, on a daily, where'd that volume? Now, look, I mean, that's poking you in the eye, isn't it? That's rallying off a price level. But again, if you're coming out of the NASDAQ and you're going into the Dow, we would expect to see this, but that wouldn't exactly speak very highly for the current rally in the industrial stocks. That's the truth. Gap down, fills, and it's reversing. We're going to move on from UNP. I don't even see anything that teachable here. Definitely not strength. Let us move on. What should we do? Boeing and Caterpillar. Boeing. Oh my. Let's go straight to the weekly. Now we know how this happened because we all remember 2020. So we know exactly how this happened. All right. Oh, there's my son. Give me 30 seconds. I will be right back. Okay, apologies for that. That was probably 120 seconds. But I had to go get my son. So let's get back to it. Boeing, what do we see here? I have to tell you, it's not looking good for the case that industrials are making a legitimate run. Okay. If you look at a daily chart, yeah, they're making new highs, but the 10 biggest industrial companies don't appear to be doing much. Yeah, not much at all. Let's go to Cat and GE. Cat. All right, now Caterpillar looks good. All right, we can't deny that. If we look at volume, we're probably on average definitely making a new high price. This is a promising stock. This makes a lot more sense. This is what I expected to see across the board, to be fair. Do we see areas on this chart on a weekly basis? We sure do. October of 23, we see. I mean, when you see a dozen or so, this is back in what? This is probably 2020. These are the highs. So when you see only a dozen or so bars at a certain height, and on this, you probably see what? This level of trading activity is only taken place a half a dozen times. Even if you say a dozen times over 4 years, that's, so what? That means it's some pretty high volume. This started in October of 23. Let's zoom into a daily. Let's see what we're looking like in a closer picture here. Well, okay. So we had that pull down in April. It was a gap down. Look, followed by a lot of volume, a lot of trading activity. A price reversal comes back down in that area, which is very, very traditional. In case you're new to this channel, if they find volume, if they find shares that they can buy, and by they, I'm always talking about institutional investors, the more knowledgeable hands, the people that are responsible for the day-to-day activity in the stock market. I'm not talking about people that have their 401ks. Those are retail, right? Or people that have a small Schwab account. That's retail. What I'm talking about are the people that are the reason the stock market is functioning on a day-to-day basis. You can see that some supply was found, some shares were found. They're going to come back and look for more shares. And in fact, they're going to keep coming back until they don't find any. So they come back down to that same price area, and guess what? They find more shares. They're still down here, more shares, more shares. And then a nice rally. This is where people that were holding the position go, we're safe. They bring it back to the previous high and they dump it off. And guess what? They go to a lower price, and look at the volume now. So back here on April 25th, May 31st, June 24th, or that might be 23rd, June 21st, and June 28th, they had found most of the supply, the shares of Caterpillar that they were going to be able to buy at that price level. How do we know that? Because when they come back down below that price level, the volume dissipates. That is how we know that. Now, right now, they need steam to break to a new high where you sit right now. They gapped through it. Is gapping through a previous high, is that good? No, it's not good. You gap through a high because you don't have the steam to get there. So what has to happen now is there'll have to be a reversal in price. First stop 372, next stop 360. That's where you're headed. 372 and then 360. Now, why do they have to head down to 372 and 360? Simple. They don't have the ability to break through that price on its own volition through strength itself. Not yet. Now, I would say that Caterpillar is the first company that, this company, Caterpillar, is showing some real strength. It's showing legitimate strength. So this is the first company showing legitimate strength. It's actually breaking to a new high while its underlying index is breaking to a new high. And you can visibly see where the shares of Caterpillar were being bought several times by institutional money. Okay. That's important. That's very important. So we are definitely going to outline this. Now, we are also going to add first stop to build to buy more cat in order to break to a new high. Okay. Second stop if needed. All right. So ultimately what we're looking at here, even though we're outlining a downward levels in price, these levels are going to be used to break Caterpillar new high price. There we go. This industrial company looks good. Reaching new highs as the underlying index is reaching new highs with definable areas of accumulation of that stock by institutional investors, the more knowledgeable hands of the market, if you will. Okay, what do we have next? We have GE, Triple M. GE, I don't know if you know this, but GE is the only stock that is still in the Dow Jones after the crash of 1929. It is the only stock left. And you can see the run here, and you can see accumulation here. Wow. That's high levels of accumulation. This is a monthly chart. Now, this accumulation that took place back here in 2008, 2009 led to a run up, but it didn't compare to the amount of accumulation that took place here in 2018 through 2021. And then off we go. Look at that. Now, it's not breaking to a new high, but it definitely has accumulation by institutions. Right? Oh, let me scoot that. And let's go ahead and change that color over to blue. What is that? 30 to 190. Let's call it 40 to 190. $40 to 190. So we have 475%. GE. $475 run up in price since 2023. I cannot even believe what I'm looking at. I'm not going to go any further than this. This is a weekly chart. I can't even believe what I'm looking at. Is GE legitimately making a comeback with one of its businesses? I am going to have to go look at what GE is doing because this is wild. This is wild. Wow. Well, there is strength, everybody. If we zoom in, which I'm happy to do, but I wanted to show that chart. So you based out here from May to September this year. You just now broke to new highs, which is that's absolutely what you would expect, given the underlying index. You can see some more institutional purchasing here. How do you know it's purchasing here? Because where price sits now, that's how you know. Good enough. Good enough. Wow. That is definitely showing strength, and it has been for a while. I'm surprised that I haven't been reading about GE. All right, so here you sit now. This is 3M Company, and look at that volume right there, everybody. And price is rallying pretty hard. It's nowhere near the highs, so you cannot say that it's showing strength inside the index because the price is not going to new all-time highs. It's not even close. But you can see the institutional buying. It's taken place somewhere around $100. Wow, it fell all the way down to 70. Couldn't find any supply, as we just discussed a minute ago. But the rally's strong. But here you are. You have a gap down here at 105, which I would say 3M is going to return to. Before it can have any true honest run, it needs to come back down here. There needs to be a look-see for more supply. So I would not be a buyer of 3M right now. If anything, I would be looking at puts on that particular company. Yeah, without a doubt, I would be. Would I be doing that now? We have to zoom in a little bit before we know that answer. You never get in the way of the trend, though. That I will tell you. You have to wait until you see an actual reversal. Now, right here, this is interesting, this level of volume, this level of trading activity right here. And this gets you all the way up to $136. You're at $137.38. You'd be a little early on the gun to buy the puts now because it hasn't actually reversed. What you'd really like to see is a lot of trading activity up here at this highest price, or as it dips back down, you see a ton of trading activity, enough to match this, and then you probably have your reversal. And this is 3M would be something you'd be interested in buying puts on. Certainly something you'd be interested in buying puts on. Okay, let's move on. I think that covers 3M. And we've actually had some great stocks to learn from today. Amazing stocks to learn from. So let's go take a look at RTX and LMT. RTX. All right. Oh, breaking out to new highs, obviously showing strength. You can see the buying back here in 2020. You can also see the buying here in October of 23, which that date is starting to repeat itself. So let's go take a look at RTX and see what we can see. We can see the buying down here at 70. We're sitting at 120. It's up almost 100%. You can absolutely see all the buying taking place back here in 2020. But right here is a very important spot. Volume picks up across the board from July of 23 through November of 23. That's a lot of purchasing. And even now, volume is higher on RTX than it has been in a long time. Let's move into a daily. We can see a lot of trading activity back here. We can see a lot here. This is at 90. We have a gap up. This is starting to be something that's repeating itself as well. And that is not good. There's a lot. This is a high level of trading activity right here on September 20th. You probably don't want to see that with a gap this far below. You're down there at 106. You sit at 121. Again, is this stock showing strength relative to its index? Absolutely. It's breaking the new highs, but it's doing so on a gap. So you got to mind those gaps. You have to mind those gaps. So I think we're going to look at Lockheed Martin next. Um, oh, there we go. Let me go back to a monthly. Yep, breaking to new highs. A lot of strength here. Um, yeah, looks good. I mean, that's definite strength compared to the underlying index. Let's see if that's a giant gap right there. And a lot of times when you find a gap, in it's specifically when it's in the top 10 companies in an index, you're gonna find that gap in most of those top 10 companies. Lockheed Martin's just showing strength right now. I don't see a big reason to sell. You can see it took off from 473, 474 on some major power, but you're up here at 580 at this point. So you've rallied 100. You've rallied about 20%, little more, 22%. Is that enough to slow it down? I don't know. I mean, this thing's moving. All right, let's move on. So we're definitely seeing some signs of real strength, uh, which is interesting. Interesting. Let's go back here to a monthly. In fact, I know we're approaching that. We probably have approached. So we're approaching new highs here. Here's Deer. Okay, you're stuck at the highs and have been for a couple of years. So that's not showing strength. But I'm going to stop sharing now because I try to keep this to 30 minutes. And I know that I've gone over a few minutes. I hope that was helpful. I hope you learned something from it. As you can see, there are several companies in there showing real strength, going to new market highs on true institutional investment. It's a shame we don't have time to go through all 30 because there's only 30 stocks in the Dow Jones Industrial. But we don't have time. And so we see some that are neutral. We see a few that are very, very strong, and a couple in there that are showing strength now, just not strength compared to the index. So, probably what we would expect to see with the Dow making new highs, but marginal new highs each day, marginal because they're not. There's only 30 companies, and as we just saw, I would say that was a mixed bag of strength and weakness relative to the index, and then neutrality. So it kind of explains why we're grinding away, but we are making new highs, right? So I hope you enjoyed today. Remember, if you're not good up here, you're not good anywhere. If you're having a tough day, get outside, go for a walk, get in the sun, for goodness sakes. It will help. Smile, fake it till you make it. I've been doing a lot of faking until I make it recently. And sometimes that's what you have to do. And then you just keep moving forward, keep moving forward, keep moving forward. Don't let that mind get the best of you. And as always, the most important thing that I say to you every single day is every day above ground is a good day, a day to be grateful for, a day to be happy. Even the days where you have problems, they're amazing days, right? You get to see the sun come up or the sun go down, right? Maybe your kids laugh. Maybe, I don't know, you have some success at work. There's always amazing things in every day. So don't ever lose sight of that. I want to thank you all for joining me. And remember to like, comment, share if you enjoy these live presentations. And I'll see you all soon. Hey, listen, real quickly. If you're not following me on Twitter, make sure that you do. It's Derek Invest. I put up a lot of charts there. Sometimes I'll, just speak in general about the market. And also, I'm taking on a few new students for one-on-one coaching. Email me, dmiller@prometheaninvesting.com. Name, phone number, email address, and your time zone, so we can set up a call and see how I might be able to help you and further your education or further your education in my system and in my process. And for a lot of you professional traders, I know it's always a good thing to learn something new and learn from someone else's perspective because it can change your perspective sometimes when you're stuck. I love learning what everyone else does because it helps me adjust at certain times. So thank you again, everybody, and I'll see you soon.